Okay, in this video, we have the amazing Lynette Zang. She is the brand and the voice behind ITM Trading, one of the experts in the world on precious metals, gold, silver, macroeconomics, and all things that have to do with financial markets, and someone that is truly doing some amazing work in the world. And so make sure you hit the like button on either side to send this out to more people. And thanks for coming on.
Well, thank you for having me, Jake. I really appreciate it a lot.
So the
Happy to
first
be here.
video I found of yours was one with George Gammon, and you were kind of one of the first people I ever heard really talk about the idea of the Great Reset and the idea of this monetary reset. And let me ask you, this year has turned into such a bizarre year in so many ways. When you're looking at everything that's happening right now in 2020, did you, out of all your years of research, did you ever think that it would come to this position where we've got all these people on the verge of foreclosure and all these people without jobs, and then it's like, do we print till the fingers get sore? Did you ever think we'd get to this position?
I did, but I didn't think that it would be a pandemic, although it is the absolute perfect excuse. And I also thought that this would happen like 2021-ish, 2020-ish, because they're already resetting the global financial system, though they've postponed parts of that for a couple of years through, the LIBOR transition into, in this country, the SOFR. They just ran a big test on it in October, 80 trillion out of the 640 trillion in notional value contracts that have to reset. And I think it's very telling that it is absolutely dead silent on the results of that auction and that transition. And then shortly thereafter, they come out postponing parts of it until 2023. I think that means it was a huge failure and they needed to buy more time. That's my opinion. That piece I can't prove because it's dead silent. You can't find any of the data.
What do you think is going to happen? We're kind of in this almost like a pause button right now until basically the new year and some of the political and election situation gains more clarity. But nobody knows exactly what's going to happen, but what do you foresee happening here in 2021?
Well, I think what they're trying to do is wallpaper over this again, and it's a huge experiment. That's the thing. All of this, and especially since 2008, is all a big experiment. So the central bankers will throw something up on the wall and see if it sticks. And the problem is that it's really not sticking. So it's requiring more and more and more ammunition to even keep it looking like it's okay. And you have this, okay, they've decided, a K-shaped recovery where you have the few at the top that have billionaires that have doubled, tripled, 10 times their wealth since March. And you have most of the public that is really struggling. And as you said, foreclosures, which, they've got the moratorium. This is not on all mortgages, but on government-backed mortgages, government-backed student loans, and even those others that got that moratorium, they're going to have to make up for all those lost payments in March. So 2021, frankly, is shaping up to be an extraordinarily, I'll say, interesting year. And the big question for me, because this is really all about confidence. So Wall Street has the confidence that they'll print more money. So every time they talk about stimulus, right, the markets go up. And every time they say it's going to be postponed, the markets will go down, really as a threat. But 2021, there's so many different programs. All the rest of the government programs are going away. Now, will they be reinstated? Probably. I mean, I think we're going to see universal basic income. I thought it was possible to happen before the end of this year, but timing is always the biggest, challenge for any technician. I can tell you what is most likely to happen based on lots of data and history, but I can't tell you exactly when. But that has to be in the cards because we're a consumer-driven economy. And if you don't have people earning money to spend, you have to give it to them. So
I think people really haven't examined that enough and really looked at the data of how many people are behind on their rent and truly how many people are behind on their mortgage and truly how many people have lost their job and are literally right now living off of basically maxed out credit cards. And so it's kind of the $1 million question. Do they let all these people get foreclosed on and go under and whether it's renters or credit cards, or do they go to the biggest level of money printing? What was the data in 2020? Didn't they print 21% of all US dollar currency was printed that year in 2020?
That sounds about right. But yeah, you can
think
see
it'll go more than that?
graphs.
What do you think will happen? Do you think it's going to go to a level we can't imagine, or do they let everyone default?
Well, number one, it's already at a level that nobody could really imagine. And, it depends on if they feel that we are too big we are too small, that it doesn't matter if we fail. Right. And they've definitely chosen and continue to choose the winners and the losers. And here's the thing. The Federal Reserve can't give money. That's Congress's job. What they can do is loan money. And so all of these loans to entities that don't really need the money, but certainly they can buy back their shares of stock. Certainly they can pay out these dividends, which is what's happening a lot. So there isn't even one little tiny doubt of the fragility of this really Jenga economy. And I think what you're really asking is, which piece is going to make everything implode? And there are so many different pieces that are floating around that piece is hard to tell. But yeah, I think they don't have any more tools. I mean, the biggest tool they had are interest rates, right? So if inflation, which is by design in the currency, because for governments, it enables them to levy an invisible tax. They don't have to go to Congress and get approval. So inflation for governments is great. It enables them to just spend more and more and more because in theory, they're paying off the debts with dollars that have less and less and less value, except that they never really pay off the debts. They just roll it over and the interest goes into the principal and compounds and compounds. So when you have that compounding interest on top of all of the money printing, I mean, if you or I did it, we would have been living underneath a bridge a long time ago. And, unfortunately, there are a lot of people that are living like that don't have access to those credit cards. And we are seeing the default rates starting to spike in a number of the different areas because really since 2008 is really when the system died, regardless of what anybody said. And that's actually when it was 2009 when Christine Lagarde did this interview, the head of the IMF at that time. Now she's the head of the ECB. But at that time, she did an interview on Bloomberg News. And don't hold me to this because I haven't counted lately, but I believe she used the term reset something like 27 or 56 times. I mean, like every other word out of her mouth was talking about the need for a financial system or this kind of reset or that kind of reset. And that's actually when I started talking about the reset in earnest, because I could definitely see the system died. I mean, the tools that the central bank has are interest rates and debt. Those are the tools. So if you've got the world anchored somewhere near zero, and then of course they did the big experiment with the negative rates, and that didn't work the way they thought it would work. So, if you lose your largest tool, then what do you have? All you have is money printing. That's all you have. So yeah, the money printing is going to go on, but just keep in mind, even at these low rates, look at the deficits that governments really around the world are running, and understanding the fact that if a government is running a deficit, that means that they're not able, through the taxation and all the means that they have for income, they are not able to pay their debts, right? And so they're borrowing it, and let alone paying all the interest on those debts. If you're compounding interest, where does that leave you or me, the normal person on the street?
Yeah, I mean, it's literally the greatest con job in the history of the world. And so, and it's interesting, so many of the social things are happening right now while the biggest con job is happening, because it's a great type of psyop that kind of can kick the can down the road. But I guess my question is, as they're kicking, and I want to get into your idea of what a monetary reset and all the research you've done into that, what it looks like through your lens. But before we get there, kicking the can down the road, you said you were talking about their tools, and you've done far more research into central bank digital currencies or government digital currencies than I have, I'm sure of that. But from what I've researched into it, to me, it seems like they're telegraphing their last tool. And of course, there's the big brother aspect of, yes, they can monitor what you're doing. But I look at it as probably more so a tool in their belt that allows them to kick the can down the road. And you said negative interest rates are their biggest tool. Well, then, do they try to take that tool a little further and go negative? And you've got your app on your phone and they're spending it, and they try to let that run for a couple more years. What is your thoughts on the central bank digital currencies? Do you think that's in the cards as a means to try to put the drywall back on?
Well, okay. For one thing, and that was really a great statement that you made, and there are a lot of pieces in there. But for one thing, we are always assuming, or people always assume, that they want to keep kicking the can down the road. And the reality is they only want to kick the can down the road until they're ready to make that shift into the new currency. Now, ultimately, I am absolutely in agreement with you. It will be a digital currency. However, what the digital currency really enables them to do, and what negative rates really are, is attacking the principal. So the inflation, we've lost like 97, 98% of the purchasing power, according to the Federal Reserve, which jury rigs their data anyway. They just changed the accounting so it looks different. Having said that, if they're already at zero in terms of purchasing power, which they're close enough to say, then the negative rates will enable them to attack your principal, because that's what negative rates do, right? This is why having physical gold and silver outside of the system is so critical, because otherwise, whatever you have inside of the system, it is the big brother asset, or aspect. It's not so much them seeing what you're doing, it's having them the ability to control your behavior, right? They call that perception management, and President Reagan was really the one that installed that in earnest into the government. And manipulating the price of gold, admittedly, I mean, I can show you lots of data on them admitting to manipulating the price of gold, which is real money, with full utility, right across the global economy, and exchanging that for everything being digital. If they don't like your politics or they want to have direct impact on your spending, right now it takes about 18 months for the central banks to issue a policy and for them to see the results in the general economy. With the Fed Now account, which is those digital dollars, that account, then if you're not spending money fast enough, because we are a consumer-driven economy, they just make it visible enough for you to go, wow, I'm not spending my money and it's evaporating, it's going away. So I'm much better off putting it into anything that can perhaps hold its value better. So I'm thinking, honestly, that once we do go to a full digital currency, that will also enable the Federal Reserve, but this is true globally, to do that, to give that universal basic income directly to consumers and control that piece, either more or less, depending upon how much they want you to spend or not spend. But, where is that money coming from? That's a button push. Takes absolutely zero effort to create that, right? It's just a push of a button. The reason why gold has been money for 6,000 years is because it takes time and labor and effort to pull it out of the ground. It's indestructible. So we can recall all the gold in electronics or in coffee filters or in even plated stuff, right? We can recall and recover all of the gold that's ever been mined, regardless of its form. And it can be reused in the financial system, in the art, in electronics, in manufacturing, in every single area of the global economy. That is the piece that most people do not understand, and I never hear anybody talking about it but me. Doesn't mean that people aren't, because I certainly don't listen to everything, but they just talk about it like it's an old relic, when what it's going to do is preserve your freedom. And it holds its value because of its full utility. These digital currencies will be used as a tool. It's not about monitoring you. It's about controlling what you do. And I used to think that I would really convert on the other side of this mess, because when they go to the digital currency, it does not mean that it's over. What that really means, when they fully introduce that out and it gets utilized, that will, I think, most likely usher in a period of hyperinflation. Because right now, that hyperinflation from all that money printing that they've been doing, in earnest forever, but really since 2008, has been going into the stock market, the bond market, the real estate market, the derivatives markets, these markets that they are desperate to keep inflated. Because what tools do they have left? They don't have any. So I don't know. Did I answer your question, or did I go off on a tangent?
That's beautiful. So one of the things that you said that I thought was interesting at the beginning of your response to the question was that one thing that people miss is that the currency
that they want to keep this going.
Yeah, that they want to keep it going, whereas you said they actually want to move it to where they want to move it. What did you mean by that, and where do they want to move it? And that's a unique viewpoint that people don't, because I guess I'm in the camp that they wanted to keep it moving, and I had never really thought about that.
Well, stop and think about it. If they have no tools left, and that's the interest rates, right? So all they can do is grow more debt, then they're kind of like done. But they want to remain in power. So it's all, you said it just right. This is the biggest Ponzi scheme in history. So it's all about the confidence. But their goal is to make this transition, and it really is also all about wealth transfer. It's all about wealth transfer from the many, so from the public to the few. That's even true when you look at the sharing economy. You have a few people that own everything, and then you have the masses that own nothing, and they have to lease. So the reality is when you're done and you have no tools left to use, you have to recreate the game. And when you look at all of the experimentation, because honestly, it's been experimentation since 1913. Okay, we'll do this. This works for a while. That doesn't work anymore. So we're going to have to change the rules of the game, get rid of the gold because, A, that was the kickoff, but gold created restrictions on governments and central banks. So they had to take the gold away from the population. Okay, they ran with that for a while. Bretton Woods, everybody tied to the dollar. But, you know, we were abusing that privilege and printing our way out of the Vietnam War. So confidence was lost of other governments in the US dollar. There was a run on the dollar. Nixon went, boom. Now governments can no longer convert dollars into gold. Right? And when he did that, he handed over full power of inflation to central banks, to private corporation and a bank. And a bank, hey, there's a few people that collect interest, everybody else pays that interest. But they ratcheted interest rates up to over, the ones that they control fully, up to over 21%. And so in the early 80s, and they've had a very long ramp time as they've used that interest rate, lowering them to inspire people to take on more debt and create higher inflation, and raising them when that inflation got too visible so that people borrowed less and therefore spent less. Well, they're at zero. Where do you go when you're at zero? Every single, without exception, every single attempt to raise rates above zero since 2009 has failed. Every single one, no exception to the rule. So they know it's game over. I mean, Christina Gorba, I'm butchering her name, but the current head of the IMF just recently came out with a paper talking about the new Bretton Woods when they changed the system again.
So what is this change of the system, do you think? What does it look like? What do you think they have in mind if they're already openly talking about it? And then you've got Klaus Schwab doing his great reset. You said that head of the IMF talking about it now, Justin Trudeau on the UN thing. What do you think it looks like, and how far away from it do you think we are?
Well, number one, there is not one little teeny weeny doubt in my mind that we have already begun to walk through it.
Yeah.
This world does not look the same as it did, 10 months ago.
Right.
Well, maybe 10 months ago. Right. But it is a completely different world that we're living in. So I got news for you. We're already inside of the reset.
Yeah. Okay? I'm with you.
Okay. Second of all, what it looks like to me is a hyperinflationary depression. That's what it looks like to me. And that's why my personal mantra and what I've been working on, I mean, you can't see around you, but food becomes the single biggest issue for most people. And right now, there are more people dying of starvation than there are of the coronavirus.
Yes.
So we're already seeing, we're already seeing that issue come up. So I think it's a hyperinflationary depression. And I think that it is critically important that everybody get prepared, number one, to sustain your current standard of living. Number two, to protect the wealth that you have managed to accumulate. And number three, if you can, get yourself into the position that the guys at the top that understand this themselves have put themselves in the position to take advantage of it. Never let a good crisis go to waste, right? And how do you sustain your standard of living? food, water, energy, security, barterability, wealth preservation, community, and shelter. Regardless of what's happening in the economy, these are the things that we all need to have a reasonable standard of living. So, people really need to think deeply about that. The two pieces, barterability and wealth preservation. First of all, on barterability, any talent that an individual possesses or anything physical, it doesn't matter, is barterable. Personally, and so I have, I'm on an urban farm here. I've been working on it. I bought this property in 2010. I have a half an acre in the middle of the city, and I produce a lot of food. And I share a lot of food, right? Because, I know that's the single biggest issue. So any of your viewers, if you have not prepared for it, think about what happened in March and April. That was a little teeny taste of what we have in our future. What we have in our future, you say, what does it look like? It's going to make March and April look like chump change. But you're going to see those 1%ers or 1% of 1%ers, you're going to see them get a lot wealthier, because this has always about wealth transfer from the many to the few. And look, you can look at income inequality and wealth inequality just to see that I can prove my point, because that really started to diverge in the early 80s. Yeah, as the central banks took control. There's always favorites. So, I think it's going to be very nasty.
Yeah, it sucks to think about that, especially the preparation portion. And I'm someone that, and my father, I have a 4-month-old baby. And so it sucks, I have to be honest, but you're lying to yourself if you think that March was the only time that's going to happen. And it sucks to say it, but it's just the truth,
Right. Can I point out at
Please.
the same time that as much as this sucks and you have a 4-month-old baby, congratulations. But what also lies ahead of us is the greatest opportunity probably since the Industrial Revolution, because we have a technology revolution. We're going into the next revolution. So if you are properly positioned and you have something that can hold its wealth, that's the point of gold. That is the single most important function, in my opinion, that it has performed for 6,000 years. It's not whether or not it goes up and down in terms of the fiat money, like dollars or euros. It is that it holds its value over time. And a rising gold cost is an indication of a failing fiat currency. So they have had to suppress it for really forever. Having said that, when they do the reset, the way they do a reset, it's not me saying, oh, gold is going to go up in terms of fiat. It has nothing to do with that. It is how they reset the currency, and this is an overnight revaluation. And the currency, the fiat money, has no intrinsic value. It has no utility outside of the trading universe and as a tool of barter, right? I mean, we agree to get paid for it, but people will say, well, you can't eat gold. Well, guess what? You can't eat dollars either. And gold at least holds its value so that you can convert them, although I prefer silver for this function, but you can convert it into the food that you need. And you can also, right now, both gold and silver, physical, are severely undervalued. When they do that restructuring, that resetting of the fiat against gold, you're going to see both of those expressed to somewhere near their true fundamental value in terms of that fiat. And those other income producing assets, like, commercial real estate, for example, severely overvalued. Now, there's a lot of changes that goes on, so you have to be, conscious of what's going on and be specific. But what is severely overvalued now going into this hyperinflationary depression will be severely undervalued, particularly in terms of gold. So you have this kind of behavior. You can grab some of this value here, convert it into income producing assets, and educate your child. Make sure your child can get the education or whatever else that you want from there. Take advantage of this. That's why the central banks are doing it and the wealthy are doing it. Do what they're doing.
So when you say hyperinflationary depression, is that the reset, or is that the bridge that takes you to the reset? Then when hyperinflationary depression's bad enough, that's when they say, and we have a new one. And then the flip switches after that, after they've run the course as far as they can go.
Well, kind of exactly. And the reason why I say kind of is because it won't really be a one-off event. Like when they bring out this next digital currency and they start doing universal basic income, and it really would not surprise me, especially since I thought that we could see that before the end of this year. I think we'll see that next year sometime. I might be right, I might be wrong. I mean, that's beyond my control. But so that will be one small step that will enable them to push us into that hyperinflationary depression, because you'll still have millions of people that are out of work. And they're just
these central bank currencies and UBI and whatnot, that's not the reset. That's a bridge that takes you to the next phase of it.
Yes, absolutely. Yes.
And then they use that to create money velocity, get the inflation. But as you say, you think that creates a hyperinflationary depression. Then once that gets bad, that's when they say, hey, here's the reset.
We're going to lop off a bunch of zeros and reset the currency. There may be a timestamp on there. That's pretty typical. And they will, I don't know how many times they're going to lop off currencies, because I don't know.
What do you mean
how
lop
long.
Off? What is that? What do you mean by that word?
Well, lop off. Okay, well, let's take this pen, for example. And I actually don't know how much it costs, but let's say it costs $1 for this pen right now. Well, as we're in hyperinflation, this pen could be $1 million.
Okay, so by lop, you mean like add the extra zero on it.
Take the zeros off.
Oh, take them off.
Lopping them off, right? So now they go, oh, okay. I mean, they've done that in Zimbabwe. They've done that in Venezuela. I mean, that's the way they do it. They take off the zeros and they say, okay, well, this is going to fix it. On average, they'll do that 3 times. So It could be 3 times, it could be 6 times. I mean, I don't know ultimately, because this is a global reset. That means it could last longer. In the strategy that I developed based on repeatable patterns and currency life cycles, and in my personal portfolio, I'm prepared for really my barterable, my living, sustained living area. My portfolio is set up to weather 10 years of hyperinflation, a hyperinflationary depression. It could take longer than that. It could take less than that. I mean, you can't have too much gold and silver. You could definitely have not enough, right? But you can't have too much. So, the worst thing that happens is that I use it to convert into the new currencies as we're in hyperinflation. Therefore, I'm maintaining my daily purchasing power as we're going through this. That guarantees me I can put a tank of gas in my car. I can buy a pint of strawberries, though I wouldn't need it because of my farm. But that means that I'm able to sustain my standard of living. And I think that's critically important.
Yeah, critical. So when you say reset and lop the zeros off. Lopping the zeros off is not the reset. It's once this gets to the place, then it's, hey, we have a new one, or is lopping it off?
It's part of the reset. It's part of the reset. This is something that makes it a little bit challenging for people, I know, because what they're looking for is one big bang event. And they go, oh, that's the reset. But the reality is it happens slowly, like through inflation, right? I mean, we've lost all that purchasing power. The target is 2% a year, because then they get your purchasing power, but you don't really notice it. That is a reset.
Okay, yeah, I understand. Well said. So let me ask you,
Right?
what's the end game then? What's the end game of this whole thing?
I think the end game is to have, just the few that own everything, going back to feudal times, really, the few that own everything, and then everybody else is leasing. And therefore, we all become basically slaves. And we have to that's why all of this technology, the surveillance economy, your data is more valuable than you are, really. They want your data. And it's all about control. Because, I mean, there's only so much wealth that you need. There's only so much money that you need. But this is beyond that, really. So the end game is to go into this new system and for them to remain in control. We have to go into a new system. We have to get rid of all of this debt. We have to get rid of all the interest. We have to restart everything. This pandemic, some even say plandemic, is a perfect justification and an excuse for this. But you need to be, look at what the central bankers are doing for themselves, because they know they're destroying the currency. And yeah, they want to remain in power with just a few that control all the wealth and the rest of us that don't. And I don't think that's a really great future for your 4-month-old child.
No, it's not. I am. I have like almost every dollar that I own is either in physical gold, physical silver, or I have some exposure to some miners as well. And sometimes I, especially being a little younger and not having as much research and financial experience, I do have to say sometimes I do get worried that, I either bought too much or they're going to keep smashing the price forever. And I did a dumb decision and I shouldn't have done this to myself, because it's such a manipulated market. And so I was wondering if you could speak on that sentiment, which I'm sure you see right now because you have your own YouTube channel. And I don't know if you read all the comments, but lately the comments have been, there's a lot of people that are very worried. Then there's a lot of people that want to go throw in the towel for Bitcoin or go back to big tech stocks. What's your feeling? What's your response to me saying something like that, and kind of your advice to me, but then also to the other people that are kind of feeling that sentiment of thinking it's so manipulated, it's not worth it anymore?
Well, what I would say to you is that I believe that it's critically important for you to really understand the true fundamental value of any asset or instrument that you are investing your wealth in. What's its true value? Because ultimately, everything always goes to its true value. And with something that's physical, something that's digital, I mean, history shows us VOOP, it can evaporate. It can just go away. So while I understand the push to it, and I certainly see a lot of advantages in this new digital service economy, we still live on this planet in a real world. And with gold and silver, or anything tangible, really, anything that's real and tangible, things always move from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. It's like this constant figure eight eternal loop. And right now we're like here on that loop. We aren't even marginally close to its fair valuation. And knowing how manipulated this is, also know this. There will come a time when it benefits those that are in power to revalue this currency. When they see confidence going away, they will revalue this currency against gold. And what is now currently undervalued will no longer be undervalued. So if you accumulate it, I mean, look at what the smartest guys in the room about money are doing for themselves. That's central banks, and they're buying more than they ever historically have, right? So if you don't know anything else, but you do what the smartest guys in the room are doing for themselves, you are most likely to come out on top. So I would tell you the true fundamental value conservatively of 1 ounce of physical gold right now is somewhere north of $12,000. If you can buy it at 1825 or 1900 or 5000 or 9000, it's a bargain. And you should always, in my opinion, everybody gets to do what they're comfortable with. But in my opinion, what we're looking at is a sucker's rally. I'm seeing a lot of insiders trading out and leaving it to the little guy. And it has me quite concerned that the naive people that got that $1,200 stimulus check has decided to be a trader, because I got news for you. You are not smarter than the algorithms and Wall Street, who knows how to fleece people. And it is very typical to get the public involved before the crash. And that's what's happening. So you always want the lion's share of your wealth in an undervalued asset that is in a long-term positive trend, and the least amount of your wealth in an overvalued asset or instrument that's in a long-term negative trend. And the way that you guys know this, regardless of what anybody says, is to go ahead and look at the graph, and what you really want to see are higher and higher lows. Because if you keep getting higher and higher lows, I guarantee you will get higher highs. And that's what's happening in both gold and silver on a long-term basis. It's easy to manipulate short-term. That's nothing. But the real trend, because you might say to me, but look at the stock market, it's over 30,000 now. Isn't that great? And it's going to keep going up. Yeah, because they're printing money. They're printing dollars. Look at the trend of the dollar, and you will clearly see a series of lower and lower and lower highs. And I guarantee you, and I can't give you a lot of guarantees, but these I can give you. As long as you continue to get lower and lower highs, you will get lower lows. And the stock market can only be converted, and the same thing is true for the cryptocurrencies. I'm doing a little more research to understand these better, but they're a trading vehicle. This is all trading. So short term, great. If you have a portion of your wealth, you want to be a trader, you're comfortable with it, it won't hurt you to lose it, rock and roll hoochie coo. But if you are a long-term investor, a real investor, and a strategist, the only undervalued asset that I see are the monetary metals. And anything that you can only convert back into dollars and have no utility outside of that one area, why are you holding? Why would you want to put most of your wealth and risk your wealth in an overvalued instrument that is designed to rob you? Because the last time I looked, 1 trillion times zero was still zero.
Okay, so let me ask you. You sell gold and silver, and you're on the front lines, and the sentiment's been low as it's been trending a little backwards for the last 4 months. Then we had the big price dump over the last, I don't know, whatever, couple weeks.
Right.
Have you had a lot of people calling you and selling right now? What has been the sentiment from your end?
Well, for one thing, I really don't deal with clients, so I'm not exactly on that front line anymore.
Got it.
However, I do pay a lot of attention, and we spend so much time on education for our clients, and we always have. It's like one of the biggest keys. I mean, I've always said, look, no matter what you do, you are paying fees. Even if you're sitting in cash, you're paying that inflation fee. The difference between everybody else and us is we are going to earn that. So I don't see a lot of selling. And I mean, I do see the lists that come through. Probably ask Eric that question. He would know the answer better than I would. But I certainly see what's going through the books. And it has slowed from March and April. But our clients really do know what's happening. So they're not kind of out there floating on the wind and going, oh, gold is going down, I should sell it. It's not a trade. It's an insurance policy. And so, no, I don't see a lot of people selling it.
Interesting. So let's talk about your outlook on that as we kind of wrap up. Some people saying this is the end of the gold rally, it's going to go lower. Other people saying it's too manipulated to ever move up much more. What do you kind of foresee with your team and the research you guys are doing? What are your expectations for gold and silver in 2021? Some people say a vaccine comes out, it's going to kill it. Well, what's your expectation?
Okay. Well, for one thing, as a technician, it has tested some support levels, okay? But what you really need to understand, and what we really saw back in March and April, it's cheap to go in and buy a contract on the COMEX exchange. It's $150 to control like almost $1 million worth of physical gold. And they can create as many of these contracts as they want. What we're also seeing is that very wealthy individuals have been going in, and that because those contracts never usually stand for delivery. They usually just roll them over. It's just a trade to make money. So it's cheap and easy to manipulate the short-term price. And as you watch gold correct down recently, as you alluded to, it was because of some options that were expiring. And so it was a good way for them to cover short positions, et cetera. And as soon as they did that, you saw a $40 move in spot gold, just what? 2 days ago or something like that, right? And gold has been moving up since then. So what I would say is absolutely anything can happen in the short term. And the closer we get to crisis, the more I expect to see the spot price battered, because again, a rising gold price is an indication of a failing currency. So in 2021, actually I'm with like Citibank and Goldman Sachs and a number of the big calls that have come out to say that on the spot market, we're going to see it at 2,500, but it's still severely undervalued. And just as the central banks have trained everybody, buy the dips, because we're going to print more money and push those markets up. Well, I would say the same exact thing for your gold and your silver. It's a freaking gift. It's a gift. It's a gift. It's a gift. Personally, I take advantage of it. I don't care whether spot gold is up, down, or sideways. It's irrelevant because that's a contract. And what we saw in like March and April were premiums of $70 over spot for just bullion. That's because in the physical world, there's a finite amount. And let me tell you, there is no fever like gold fever.
I love it. All right. So last question, if you just want to take 30 seconds. I've said before something similar to what you said. At some point, it seems that these people that are the buyers of gold, which are largely the central banks, at some point, they should have a vested interest in letting the price run for the sake of their own leveraging power, balance sheets, whatever you want to call it. Is that kind of your interpretation of that when you said that earlier?
No.
Got it.
They will continue to suppress the price of gold and accumulate it, taking it away from our ability to accumulate it, which is why it's so important to do it now. Do it today, do it tomorrow, do it the next day. Just keep doing it, because that is how they perform the reset. So they will continue to suppress it as they continue to accumulate it until they are ready to start lopping off zeros. When they start lopping off zeros, that's when you're going to see the spot price explode to the heavens. In Venezuela, I think overnight, the first time they did it, it's up much more than this now, but they suppressed it forever. And then I think overnight it was up like 3,500%.
Oh, wow.
Right. So it isn't, they're leverage. I mean, central banks
Interesting.
create
So they're
the
doing
money.
this so they can corner more of the market for a long-term end game, which is to have a reset, and then use gold as a leveraging power where they say, look, we have a reset and we have all the gold and everything's okay. And it's to take it away from everybody else. Understood.
Yeah, exactly. They're going to say you can trust it because history shows us.
Right.
If something has happened,
and they're like, but don't ask us why we have all of it, but you can trust the gold, remember?
Exactly.
Okay,
Exactly.
understood.
So, just like you were telling me earlier about being able to audit the Fed, right? Audit Fort Knox. I mean, these things are opaque
Right.
to us because they don't really want us to understand what's happening. Additionally, they make things intentionally complex so that people do not question what they're doing. Oh, I don't understand money. It's really very simple. You get paid and it takes labor and you get paid for your efforts. Well, that's what gold money is. It takes labor, energy, and effort to pull it out of the ground. So when we're on a gold standard, you're trading labor for labor. Now you're trading labor for debt. You tell me, does that make sense?
No,
And going into it, you know what they're talking about? The new system being backed by contracts. Contracts. How many contracts get written? That's what the GDP is all about, is contracts. This is outrageous to me. Is it outrageous to you?
No, it is outrageous. And I do know, I want to be respectful of your time. I know you do have to go. We are in our final minute of our session, but I thought that was a really interesting way to end because it makes you think about there's always a buyer on the dips. Well, it's the same people suppressing the price that are cornering it for a long term. So that's an amazing way to end. I truly appreciate it. Just want to be respectful of the fact that you got to head out right now. Everyone, I'll put the link to Lynette's channel if you are unfamiliar with it. Make sure you hit the like and subscribe. Give us a comment down below if this was amazing. Thank you so much. I really appreciate it.
Yes, I just want to say one more thing, because really what makes us different than any other firm out there is the strategy that I initially created from my studies. I started studying currencies in '87. So while we do everything in physical metals, gold and silver, we really like to help individuals customize a strategy. You're working with my consultants, you're working with me, and we've all come together with all of our experience and made the strategy better and better and better. We're always looking to do that, and we're always looking to be of service.
Beautiful. So I'll put the link right there down below for everyone. And thank you so much. It was a pleasure to get to chat with you and get to meet you.